Hi guys, it's Marissa Schultz here, property investor and author of The Rise High Investor, and I bring you these weekly videos to help you with your property investment journey and hopefully help you achieve your property investment and financial goals. Today I am looking at whether you should go fixed or variable with your property investment loans. And to start, I just want to say that obviously there's pros and cons to both, okay? And I think that this decision should not be about outsmarting the banks in terms of trying to get a cheaper interest rate. Instead, there are other factors that you should consider to decide whether you want to go fixed or variable on your investment loans. So let's just talk through the pros and cons. So a variable loan, obviously the great positive of that is that it's very flexible. You know, generally you can pay it down quicker. You generally can have the option of linking an offset account to it, which can be a great facility to help reduce your interest costs. And potentially you may have access to redraw. They don't normally recommend that you redraw from an investment loan, but that's for another video. Let's look at fixed. The really big positive about fixed loans is that it gives you certainty. And for risk-averse investors like myself, I really love that certainty, knowing that the interest rate is locked in for a certain period of time. However, it does give you limited flexibility. So it doesn't normally give you the ability to, pay down a lot off the principal of the loan during the fixed term. And or, if you want to sell it or refinance it during that time, it can be very difficult and very expensive. You also generally don't have the ability to link an offset account, although there are some banks that do allow an offset account against a fixed loan. So there's pros and cons of both. Ultimately, when you weigh them out, variable gives you flexibility, but there's a risk that interest rates will change. Fixed gives you certainty, but you are losing the flexibility. So what is the right answer? Well, my thoughts are, as your portfolio grows and as your debt levels grow, it's actually really good to have a mix of both. I actually like to have a mix of some of my loans fixed and some of my loans variable, so I get the best of both worlds. With my variable loans, I get the benefit of having my offset accounts and having the flexibility to do what I want with them. With my fixed loans, I'm getting the benefit of certainty of interest rates. That way, if interest rates rise, only some of my portfolio is impacted while some of it is staying consistent, which balances out the risk for me. And I think that it's, getting the best of both worlds, and I think it's a nice balance. My ideal formula as to how much I like fixed and variable is about 50%. I like to know that about 50% of my investment loans are fixed and about 50% are variable, because I think that gives me a really safe number to make sure that I'm comfortable with the, risk of increasing interest rates, but also have properties that are, securing fixed loans that I know I will be keeping for a very long time, so I don't have to worry about selling them during the fixed rate period. In terms of what percentage is right for you, well, that's going to depend on a few things. Firstly, it's going to depend on your risk profile, and it's also going to depend on what your plans are for the future. So you really need to think long term about what your risk profile is. Make sure that you can sleep at night with your interest rates that you've got. If cash flow is tight, you might want a higher percentage fixed. You might want 70 or 80% fixed. Whereas if cash flow is really, really strong and you have the ability to pay down your loans a lot faster, then you might want only 30% or 20% fixed to give you that flexibility. So depending on your financial situation and your circumstances will determine the perfect percentage of fixed versus variable for your portfolio. Make sure you're working with your mortgage broker and giving them your long-term plans, because they'll help guide you along the way. So that's all I've got time for today. I hope it's been helpful. I really appreciate you tuning in. You can leave a comment or question for me below or email me directly at propertyinvestor@risehigh.com.au. You can also get a discount off of my book as a thank you for watching. All you need to do is hop onto the website risehighinvestor.com.au and enter the code word video at the checkout, and you'll get a 50% discount. And that is my way of saying thank you to you for tuning in. So thanks again. I will see you next week. Looking forward to it. Bye.